and take mathematics and teach the kids what they need to learn, which is how to balance a checkbook, not how to calculate the volume of a spoon and a bucket and all this other bullshit that you're never going to use in your life.
Greg Foss, one of the well-known people in the crypto market today. How did he justify this? Let's start with the fact that Bitcoin has fallen a peg or two due to the systemic concerns and contagion effects in the cryptocurrency market. There is no doubt that this will continue to happen. For instance, Do Kwon was not as smart as he thought. Unlike Luna that survived the crisis pretty well, Do Kwon believed he was the smartest person in the room. He even called himself the stablecoin king or whatever that was. At the end of the day, if you believe Foss, he would say that you're the smartest person in the room if you stay out of serious trouble. It was a poor model that Do Kwon tried to follow. It was essentially a digital equivalent of the fiat Ponzi, which is how Luna and Terra operate. Whatever the case, you get what you deserve if you don't do your research, which is a bagel based on the worth of your seed equity. Foss says the truth is that with the second blow, which came right after the first, Luna once more knocked Bitcoin to the ground. He went on to say that the DeFi protocols will all fail, keeping the network's health in check. And those aren't simply Foss's words. Those are from NYDIG. For the long-term health of the Bitcoin network, every single DeFi protocol currently in use has a significant probability of failing. However, in the short term, systemic risks and contagion effects exist only within the so-called crypto universe. Currently, half of the world's crypto assets worth $1 trillion are in the form of coins. Foss asked a very important question. Why would I purchase a Bitcoin for $24,000 when I can purchase XRP for 32 cents instead? After all, XRP must be affordable because it's trading at a very low price. This will be a very difficult lesson because, once again, Foss says that we fail to understand the concepts of a market cap utility and unit trading price. A simple example that Foss drew is that there are many penny stocks that exist and they will never disappear. But that doesn't imply that you should buy every single penny stock available to man. In a capitalist society, you can always sell it for hope and a prayer, but it's the same with digital assets. For instance, one could be the superior blockchain now, but tomorrow, it won't be. Especially when you have founders tokens and other incentives that encourage people to promote the newest and greatest DeFi. Foss recommends that we should take mathematics and teach the students the skills they need to acquire, such as how to balance a checkbook, rather than how to determine the volumes of items such as spoons, buckets, and other things that they'll never practically use in real life. Yes, with the current curriculum that we're using, a lot of math is important, and some of it is involved in day-to-day use. Some is valuable, while others should be for individuals who are specifically calculating bucket volumes and other things that are inessential. These people generally just make up less than 1% of the world's population. It brings to light the question, how about you educate everyone who needs to balance a checkbook on debits, credits, double entry accounting, and other relevant topics such as taxes? Before we continue, a brief request from us. If you find value in these types of videos, please don't forget to like, subscribe, and hit the notification bell so that you don't miss our valuable crypto content in the future. Now back to the video. We have completely lost the plot since there are only so many engineers in the world, but everyone should know how to balance a checkbook and maintain a straightforward budget. At least that's what Foss recommends. So when he says balance a checkbook, what he really means is that just because you have $100 coming in doesn't imply that you have to spend all of that $100. The wise course of action is to save some money and build riches for yourself. How do you make money, you might ask? You certainly don't retain it in a fiat currency because it will eventually lose value. Foss uses this particular example over and over again. Back in the day, he used to install asphalt shingles when he was 20 years old. It was intense work. Well, the value of his work energy went into the house, but it's not just that. It was the hot, blazing sun, and generally, he simply earned $5 every hour, over an 8-hour day, which is equivalent to $40. At the end of the day, it was nasty, time-consuming, and he only received $40. However, if he had saved that money in fiat currency for 38 years, because he's 58 right around now, he would have just spent $56 on a lobster roll and beverage in the United States. That says a lot. You shouldn't store the value of your labor energy in fiat money because again, if he had saved the $40 he earned working in the sun for 8 hours for about 38 years, he would have only spent it on a lobster roll 38 years later. So the recommendation is that you must save the worth of your work energy in a digital currency. Oh, and what is that called? That, my friends, is Bitcoin. If you have your money in digital, you can easily access it anytime, anywhere, and in any place. So you don't have to worry about accessibility at all. Foss claims that he doesn't keep all of his wealth in bonds. Neither does he put everything in Bitcoin. But you can be sure that if it's in a cryptocurrency, it won't be debased away from you because of its algorithmic and code security. Now, a question is, what does it mean to be a good risk manager? Would it be if you play a diversified risk game? Diversifying your risk doesn't mean that you place all of your assets in just one currency. Rather, it means using probabilities and expected values to manage this risk. And this is the reason why Foss says he adores Bitcoin. Some Bitcoin aficionados have asked him, Foss, if you love Bitcoin so much, why aren't you fully invested in it? Foss says the answer is pretty straightforward. In Greg Foss's perspective, the best asymmetric return potential that he has ever seen in his life is with Bitcoin. To benefit from the upsize, you don't have to be 100% dedicated to putting all of your money in Bitcoin. So once more, you have to decide on your own personal portfolio allocation. Foss says, and I quote, I've managed and traded bonds for 35 years, and this is the worst risk-reward situation I've ever seen in my life. I don't own any bonds. In fact, I'm short of these right now. The reason for that is I'm borrowing money, thus I'm also essentially short in bonds. I've never been shorter on bonds in my entire life than I am right now. So it pays to be a borrower right now rather than a lender. I don't have all of my wealth in Bitcoin. It's spread out among a variety of tangible assets. But of that wealth, 40% is Bitcoin. I don't think it needs to be 100%, but other people do. They have all of their fortune in Bitcoin. Due to asymmetry, which means volatility up and volatility down, but the next volatile move up is higher than its most recent all-time high, you have to have dry powder to be able to buy it when it comes back down. They have recently seen their wealth suffer. Bitcoin is currently 1/3 of its all-time high. This is what we have to learn about Bitcoin. If you want to put your money in, you have to make sure that you know the risks and you're aware of the potential rewards as well. Make sure to read those charts right and be sure to strategize with all of the information that you have at your disposal. This concludes today's video on cryptocurrencies and featuring Greg Foss's recommendations on how we should know more about how crypto works instead of teaching the young generation of math that they don't really need. Please leave a like, subscribe, and click the bell button to receive information on new crypto content related videos. Anyway, see you later, good luck out there, and thank you for watching.